Hello, everyone. A massive warm welcome to you all. I want to start by saying a specific thank you for coming to watch the video today.
Absolutely.
We really appreciate you spending your time with us to geek out on the future of work.
It is great to be here with all of you.
Today, we are unpacking the latest from Upwork. Specifically, we're looking at their fourth quarter and full year 2025 earnings call.
Right.
And if you think this is just about some freelance website numbers, well, think again.
I mean, this is really a story about how the gig economy is trying to graduate into the AI economy.
That's the perfect way to frame it.
We are looking at results from the fiscal year that ended December 31st, 2025. And the big headline isn't just the money, it's the transformation.
Yeah, Upwork is claiming they've finished a 3-year overhaul and are now positioning themselves for what they call the AI era.
They are pivoting hard.
So here is our game plan for this discussion. We are going to start with a summary of management's presentation.
The high-level financials, the big strategic vision they pitched.
Exactly. Then we are going to go question by question through the Q&A session with the Wall Street analysts.
Which was a really, really dense session this time around.
It really was. We'll break down who asked what and what the answers actually reveal about the company's future.
And then we'll wrap up.
Right. And finally, we'll wrap up with the main themes you really need to walk away with.
This sounds like a solid plan.
Okay, let's kick things off with the presentation from CEO Hayden Brown and CFO Erica Gessert. Give us the lay of the land for 2025. How did they do?
So if you look at the full year of 2025, the numbers tell a story of a company that is growing slowly but is incredibly profitable.
Okay.
They hit over $4 billion in gross services volume, or GSV.
That's the total value of all the work done on the platform.
It is. There's a lot of freelance invoicing.
There really is.
But their actual revenue, the slice they keep, reached $788 million. That's only up 2.4% year over year.
So top-line growth is a bit flat, not exactly hyper-growth?
No, but what about the bottom line?
That's where they shined. Adjusted EBITDA, basically their operating profit, was a record $226 million.
That is a 29% margin.
A very efficient machine.
Very. And specifically in Q4, things did pick up a bit. GSV growth accelerated to 3%. And revenue was up 4%.
And I noticed they are putting their money where their mouth is regarding their stock price.
They are. They repurchased $136 million in shares throughout 2025.
Which is usually a signal that management thinks the stock is, undervalued.
Exactly.
So the bank account looks good, but the strategy is the fascinating part. They laid out 3 pillars for this new Upwork. Let's break those down. The first one, inevitably, is AI.
Right. But it's not just we use AI. Their vision is human plus AI.
Okay.
They reported 50% growth in AI-related work on the platform. It's now an annualized business worth over $300 million.
And they've introduced UMA, their AI agent.
Yeah, to help manage workflows.
And there was one statistic they dropped that I think is maybe the most important thing we'll talk about today.
You're thinking of the collaboration stat.
Exactly. Their research shows that when a human freelancer collaborates with an AI agent, job completion rates go up by nearly 70%.
That is a massive efficiency gain.
It's huge.
It's the difference between a project getting stuck and a project getting done.
That is the aha moment. AI isn't replacing the freelancer. It's making the freelancer 70% better at finishing the job.
Precisely.
Okay, what's pillar number 2?
Pillar 2 is SMB, or small medium business. They are finding a lot of success with a product called Business Plus.
And active clients for this tier.
They grew 49% sequentially. That's quarter over quarter.
And these aren't the clients spending $50 on a logo.
No, not at all. These clients spend 2.5 times more than the marketplace average.
So they're moving away from the garage startup.
Yeah, to the actual small business with a real budget.
Which leads us to the third pillar, and this feels like the biggest gamble, enterprise.
This is the Lifted strategy. They launched a new platform called Lifted, specifically for large contingent work contracts.
So they're hunting elephants now.
They really are. Targeting 3,000 specific accounts that each spend over $50 million a year on temporary work.
Wow. So with all that in place, what are they telling us to expect for 2026?
The guidance is, it's interesting. For 2026, they expect revenue between $835 million and $850 million.
Which is about 6% to 8% growth.
Correct. But And this is key. It is backloaded. They were very clear that growth is going to ramp up in the second half of the year.
As this lifted platform fully integrates.
Exactly. So a slow start, fast finish.
Okay, that sets the stage perfectly. Now let's get into the weeds. We are going to go through the Q&A session.
This is where the analysts try to poke holes in that pretty presentation.
Let's do it. First up, we had Eric Sheridan from Goldman Sachs.
Right. Eric went straight for the timeline. He basically asked about the scaling of investments in AI and the lifted platform.
His question was pretty much, if you're spending all this money now, how does that impact the momentum and the exit velocity for growth later in 2026?
He wants to know when the check clears, essentially.
So what did the company say?
CFO Erica Gessert took this one. She confirmed that the 2026 guidance assumes a ramp.
Okay.
They are spending heavily right now on the lifted integration, hiring sales teams, setting up legal entities, all of that.
So Q1 and Q2 are for building.
And Q3 and Q4 are for earning. They don't expect to actually onboard those big customers until the second half of the year.
Got it.
But she did note that on the marketplace side, the AI category is already growing over 50%, and Business Plus is growing 24%.
So they expect to exit 2026 at a high growth rate, but patience is required.
That's the message.
Next, we had Ron Josie from Citi.
Ron was interested in the product features. He asked about the early benefits of AI search.
Right. Are people actually finding freelancers faster?
Yeah, and he also wanted details on the sales and marketing results specifically for that Business Plus product.
So what was the verdict?
CEO Hayden Brown jumped in here. She highlighted features like UMA Recruiter. It's accelerating time to hire.
And the conversational search.
She said it's delivering better matches. Basically, the AI is working.
Okay. And on the marketing spend.
Erica Gessert added that the marketing campaigns they launched in Q4 for Business Plus are working really well.
Bringing in those high-value customers.
Exactly. And here's the kicker. Because they optimize cost elsewhere, using back-end automation, they have extra cash to increase marketing spend in Q1 to chase even more of those high-yield clients.
That's a nice position to be in. Next up was John, standing in for Brent Thill from Jefferies.
John had a two-part question. First, he asked about the Q1 guidance, sort of implying it looked a little soft.
Maybe some seasonal factors.
Right. And second, he asked about top-of-funnel performance, specifically comparing standard SEO to GEO.
Let's pause for a second. GEO stands for Generative Engine Optimization, right? Like ranking in ChatGPT instead of Google.
Exactly. It's the new frontier of search.
So how do they answer?
On the guidance, Erica Gessert used a very specific phrase. She called Q1 a bridge quarter.
A bridge quarter?
Yeah. They are actively focusing on larger clients and moving away from low-value transactional contracts jobs that are $100 or less.
So they're essentially firing their worst customers.
In a way, yes. And that hurts the total volume numbers in the short term.
But I'm guessing the quality is going up.
Well, she pointed out that GSV per active client is up 7%. So yes.
And what about GEO?
She said it's early days, but they are seeing very good initial signals, even though there's still a complex interplay there between Google and the new AI answers.
Interesting. Next was Maria Rips from Canaccord.
Maria focused on the people. She asked for more detail on active client trends in Q4.
And then she asked the big question.
Is there a supply bottleneck for AI talent? Can Upwork actually find them?
That feels like a legitimate risk. What did management say?
Well, Erica Gessert started by highlighting that churn decreased by 130 basis points year over year, so clients are staying longer.
Which helps. But what about the talent shortage?
Hayden Brown shut that down completely. She stated there are no bottlenecks.
Really?
None. They have 250,000 AI experts on the platform right now. Plus, they are partnering with OpenAI to certify even more talent.
250,000 experts. That is a deep bench.
And it's their fastest growing category, up 50%.
Okay, moving on to Matt Condon from Citizens.
Matt wanted to know about the enterprise demand. He asked if existing clients are showing test budgets or signals that they want to spend more.
And he asked for an update on the variable freelancer fee. That's their dynamic pricing model, right?
Yes, where the fees change based on demand and category.
So what's the news there?
Hayden Brown confirmed the enterprise pipeline is strong. She said they are getting invited to RFPS requests for proposals that Upwork wouldn't have even qualified for in the past.
So Lifted is getting them into the boardroom.
It is. And on the fees, she confirmed the variable freelancer fee was successfully tested in 2025.
And it's expanding.
Yep, rolling out to 2 more categories in Q1 and will expand gradually. It's a lever they can pull to drive revenue.
Next was Bernie McTiernan from Needham.
Bernie caught a detail that surprised him. He noted that 38% of Business Plus clients are new to Upwork.
Right, he thought it was just an upgrade for existing users.
But it turns out it's bringing in new blood. He asked about the go-to-market strategy there.
That 38% number is huge. It means it's an acquisition tool.
Exactly. Hayden Brown explained that Business Plus is moving them upmarket to attract larger SMBs companies with 50-plus employees. These aren't people looking for a quick fix.
They're looking for a workforce.
Right. And Bernie also asked about the enterprise revenue dip.
Yeah, why would it dip if the pipeline is so good?
It's a tactical decision. Erica Gessert clarified that enterprise revenue is in a holding pattern. It will actually decline slightly in Q1.
Why?
Because they literally paused selling their legacy enterprise plans. They told their sales team to stop selling the old stuff and focus entirely on the new listed strategy.
Wow. So they turned off the tap on the old product to force the transition to the new one.
Correct. It causes a dip now, but sets up the ramp for the second half of the year. A bold move.
It really is. Next up, Rohit Kulkarni from Roth Capital Partners.
Rohit asked a great fundamental question. What drives the metric that AI clients spend 3 times more? Is it higher rates, longer projects?
I love when analysts ask why. So what was the breakdown?
Well, Erica Gessert explained the math. AI spend is higher primarily because hourly rates are about 40% higher than average tech wages.
AI experts are expensive.
Very. Plus, the projects like building AI infrastructure are just larger and more complex.
And what about the human-agent collaboration part of his question?
Hayden Brown elaborated on that. She reiterated that human plus agent beats agent alone by 70%.
Right.
She said Upwork is rolling out workflows where humans and agents work as pairs to deliver outcomes. They are capitalizing on the agent economy, which is projected to be a $130 billion market.
Next was Josh Chan from UBS.
Josh was looking at the profit margins. He asked for a bridge on adjusted EBITDA from Q3 to Q4. Basically, why did profit dip from $59 million to $53 million?
Was the dip concerning?
Not really. Eric and Gessert attributed it to integration costs for recent acquisitions, about $6 million in Q1 and standard Q4 bonus accruals.
So mostly one-time stuff.
Yeah. And he also asked for milestones for the enterprise strategy.
What should investors be looking for?
Hayden Brown gave a clear roadmap. They're targeting those 3,000 specific accounts. The key milestone is migrating clients to the lifted platform by mid-year.
If they hit that, we should see the revenue step up in Q3 and Q4.
That's the plan.
We're getting near the end. Brad Erickson from RBC Capital Markets was next.
Brad asked the tough question. He asked which parts of the marketplace are seeing headwinds. With overall growth at only 3%, something has to be dragging it down.
And did they admit what was dragging them down?
They did. It was a moment of candor. Hayden Brown identified headwinds in writing and translation.
Which makes sense, because ChatGPT can do a lot of that for free now.
Exactly. Those categories are shrinking. She also noted low-end transactional work is down.
But they're still taking market share.
That's what she emphasized, that despite the slow macro labor market, Upwork is taking share overall.
And on M&A? Acquisitions.
She clarified that the 2026 guidance does not rely on acquisitions. They are open to buying companies if it helps, but the plan works without it.
Okay, finally, Marvin Fong from BTIG wrapped up the Q&A.
Marvin asked for details on those 2 new lifted customers they mentioned. How big are they?
And he followed up on the math.
Right. How can you expect client growth in Q1 but a revenue decline? It does seem contradictory.
So what's the deal with the new clients?
Hayden Brown described them as sweet spot profiles. We're talking tens of millions in contingent spend. They signed up because they can handle all contract types on one platform.
And the revenue disconnect.
It's the lag effect. Erica Gessert explained that even when you win a new client in Q1, it takes months for them to ramp up their spending.
Meanwhile, you've stopped selling the legacy product.
So that revenue drops immediately. You get the client win today, but the revenue win comes later in the year.
So we've gone through the numbers, the pitch, and the grilling from the analysts. Let's zoom out. If I'm watching this, what are the main themes?
I think there are 3 big takeaways here.
Hit me with number 1.
Theme 1, the transition year. Do not judge 2026 by the first quarter. This is a bridge year.
Right.
Q1 is going to look messy because of the investments in lifted and the pause on legacy sales. The entire growth story is weighted toward the second half.
Okay. Theme number 2.
Theme 2, AI is a tailwind. This is the counter-narrative. For years, people thought AI would kill the gig economy.
But Upwork is arguing the opposite.
They're arguing that AI is boosting it, GSV is up 50%, rates are higher, and that human plus agent strategy is increasing efficiency. They are successfully pivoting.
From a gig site to an AI implementation site.
You got it.
And finally, theme number 3.
Theme 3, moving up market. This is the end of the $5 logo era for Upwork.
They're shedding those low-value, sub-$100 contracts.
To focus on higher spending SMBs via Business Plus and massive enterprises via Lifted, they are trading volume for value.
It improves churn and unit economics, even if it slows down total volume growth in the short term.
Exactly. It's a fascinating pivot to watch.
They are essentially rebuilding the airplane while flying it.
That's a great way to put it.
Well, that wraps up our breakdown of Upwork's earnings. Thank you so much for watching.
It was a pleasure to walk through this with you all.
If you found this helpful, please click like, share the video, and subscribe to the channel. Stay tuned for upcoming content if you enjoyed the video. We'll see you next time.